Good afternoon, everyone. Thank you for being here with us. We're going to get right started because we have a very big and broad topic that's very much in vogue again these days, and we don't have much time. So we're going to chat about crypto, what the outlook is from a regulatory perspective, from investors, from a country's perspective, a financial center's perspective. Emmanuel, I want to start with you. So Abu Dhabi was one of the first, and the ADGM was one of the first, regulators in the region to come up with a framework. Can you tell us what sort of the thinking was behind it and what the lessons learned have been so far?
Thanks, Anna. The thinking was really from the genesis of our fintech agenda. So we launched a fintech agenda in the beginning of 2016, and that then evolved our thinking. And we had a lot of engagement, interaction with the fintech industry as a whole, from the tech side to the financial services side. And one area that kept cropping up was digital assets. So we thought, well, let's look at what the risks are as a risk-based regulator, an activity-based regulator. And we decided, let's try and build a framework around those risks that this type of activity will present. So we built that in 2018 when we launched our digital asset framework. I mean, the key risks for us in our framework were money laundering, obviously, number one. And then we had investor protection, so things like suitability, disclosure, etc. And what flows on investor protection is custody, safekeeping of assets. So we applied the full regime on those areas. We also looked at market abuse, if there's an exchange operation. So we applied our market infrastructure framework, but we tweaked it to make it work for the digital assets. But our digital asset framework was much broader than just crypto. So we tackled crypto, digital securities, and fiat reference type tokens, stable coins, etc. So we took a very big, comprehensive approach, and but we put the bar high as well, because ultimately we wanted to make sure we could mitigate the risks, because it was a very new area and no one else had really tried to tackle it.
And notoriously, it's had big ups and downs and big explosions. So Yousef, Qatar has taken a very different approach to crypto, but you've been very active on blockchain and tokenization. So can you talk a bit about what you've been doing here in that area?
Yeah, thank you. So we're the financial center. We're pretty much the same as ADGM, except we have a slightly different operating model in that we are an onshore legal environment, and businesses that set up in the Qatar Financial Centre can do business onshore freely, which means you're taxed and there are no physical boundaries. So we have to be a bit more cautious and coordinate with the local regulators when it comes to digital assets. But if we go back to digital assets, a lot of people confuse digital assets with crypto, and digital asset could be any type of value in digital format that could be transferred and owned and powered, of course, by blockchain or digital technologies. But, crypto is just one vertical. You have stable coins, you have central bank digital currencies, you have security tokens, you have utility tokens. So, there's a great universe out there in terms of digital assets. When it comes to the Qatar Financial Centre, obviously the policy of the central bank in the state of Qatar is that crypto is a no-no. And for us, crypto is a no-no. Even trading crypto is heavily regulated here, even if you do it through the local banks. So, our entire focus and resources and investments has gone towards tokenization. And the reason we've gone that route, not to say that we haven't tackled the other verticals, but most of our focus is on tokenization because, first of all, tokenization solves a real problem we have in the economy, especially when it comes to real assets. Democratizing, real assets such as securities or such as real estate really helps drive the economy go forward. If you look at the universe when it comes to tokenization, you have $30 trillion of tokenized assets expected by 2030. You have $15 trillion of illiquid assets being tokenized by 2030 as well. And then you have $8 trillion of security tokens expected in 2030. So I think There is a lot of focus on tokenization. We believe it solves a real problem for us. We're going to focus on it. We've issued regulations when it comes to tokenization. We have the digital asset regulation that was launched in 2024. We have the investment token rulebook as well. And we have guidelines for security tokens. We've been able to put a framework to start licensing digital asset companies in the KFC swiftly, efficiently. Some of those entities, when it comes to artificial intelligence technologies, are non-regulated, so we've taken a very liberal approach. We've licensed them in less than 24 hours. For the more regulated activities, we have plugged in central bank regulatory framework, which applies to the entire state of Qatar. You can still benefit from the legal environment in the Qatar Financial Centre, have English common law in terms of registration, but when you conduct activities, digital asset activities, you have full access to the onshore market and you're regulated by the central bank, and that's the approach we've taken.
So Ola, you're as a business in the region, right? How do you approach the fact that rules are still a bit fragmented? How do you go about, working somewhere where just, in the region there's a difference? Not to say, globally even.
So as BitOasis, we've been the first and today one of the largest crypto asset platforms based here in the region. We're headquartered in Dubai, and we've got regulatory licenses between the UAE and Bahrain as well. So those are the two countries or jurisdictions within the GCC where we see regulatory maturity for broker-dealer businesses that are trading crypto assets. Spot largely what we're offering, and I think we're seeing some frameworks being developed for the crypto derivative markets as well. So our licenses that we have purely broker-dealer in terms of activities, and we, as part of that, can offer custody as well. And I would say the market is fragmented from regulatory perspective, correct. But overall, I think the MENA market, and especially the GCC, has been, in terms of demand and growth, has been amongst the fastest growing markets. The two fastest growing markets in terms of adoption is the UAE and Saudi. And Saudi actually between 23 and 24 has grown by over 150% in terms of crypto adoption, despite the slowness in the market, at least in 2023. Now, obviously, the market has really kicked off. UAE obviously is on par with the Saudi market in terms of growth, and majority of our activities today is focused on the UAE market. Obviously, we've just secured the Bahrain license and will allow us to serve high net worth individuals or qualified investors, with crypto services across the GCC market. But from a retail perspective, obviously there are still challenges in terms of regulatory clarity in some jurisdictions across, not just GCC, I would say, but also across the region overall. Definitely for us as, builders, entrepreneurs, operators in this space, having more homogeneous regulatory frameworks, perhaps passporting, agreements are set up would definitely help us continue to grow and scale and tap into the market opportunity in a regulated market. Because the reality that we're seeing when there's lack of regulatory clarity, especially in large markets, for instance, like Saudi, Egypt, other markets across the region as well, the demand is there, and that demand is being met. However, it's being met by unregulated platforms, sort of, underground type of markets that really exposes consumers to risk. And similarly as well, there's a risk of, higher risk of money laundering, terrorist financing, and all of that comes with unregulated activities. So we try to partner up with regulators, share our know-how from a public policy perspective, and then once licenses are there, be amongst the first to get those licenses.
So just one quick follow-up. What do you think is driving this increase in demand in the region?
I think there are several reasons. First of all, I think the demand that you're seeing across the GCC is quite different to the demand that you're seeing, for instance, in other places across North Africa as well, Egypt, etc. In the GCC, largely, I would say investment in a new asset class. So, Bitcoin in the last 3 years, in fact, even in the last 5 years, has been amongst the best performing, assets in terms of an investor portfolio. So over the last 3 years, it has appreciated by over 290%. And overall, obviously, if you've been early in the market, you would have done significant gains. So overall, I think it is really investment in a new asset class that has been high performing. Bitcoin, I would say, more specifically. And then what we're also seeing, and that's an adoption not just in the GCC, across the region as well, the usage of stable coins for cross-border payments, paying freelancers, online payments, remittances, etc. And I think that's where regulatory clarity is very important, because crypto is not just crypto assets. And I think also, Yousef, you just mentioned there's the tokenization part that requires a different regulatory framework. There are stable coins and payments that also requires a different stable coin framework. And we're definitely seeing regulators across the GCC catching up to that. So I think there are different use cases, but overall, I think there's sort of the right product market fit when it comes to that type of application, payments, investments, and later on, obviously, tokenization as well.
Emmanuel, just taking a step back to the global fragmentation and regulations, you obviously will be speaking to your peers. Do you think there will be more harmonization? Because part of the play in crypto, we've seen exchanges move from one country to the other, have part of the business somewhere. So is it likely that there will be harmonizations? Is it needed?
I like to think of it as alignment. And I think rather than harmonization, because unlike sustainability and taxonomies, which I won't go into today, there's been a gap in regulations. So rather than there being a whole host of regulatory frameworks that are competing with each other and not quite aligning, we have a void. And some of us have jumped in much earlier than even the standard setters and developed frameworks in that void. So like what I was describing earlier in 2016, 2017. What happened in the last 4 or 5 years is that in particular IOSCO, which is the securities standard setter in essence, and the annual meetings were in Doha here last week. And one of the key 3 topics was crypto and virtual assets. And it has been for the last 4 years. And there's been a lot of work done amongst the members of IOSCO to develop a harmonized, principled approach to the regulation of crypto. And last year that came out in some more formal documentation. But that was a consensus-driven alignment. The good thing for us was that consensus and alignment fitted well with our framework, because it tackled the same risks that we had tackled back in 2018. So for us, it was quite refreshing, and it validated all the work that we had done. So we're pretty confident we're on the right track, but you have to be vigilant at the same time. When it comes to alignment, not fragmentation, I think you're seeing more and more of that globally, and I think everyone's going to use the IOSCO principles and guidance to create that alignment, like we did with banking and other securities regulations over the last 30, 40 years in particular. So I think alignment is well on its way.
Yousef, what areas do you think have the most promise here? Which sectors for adoption of blockchain and digital assets as you see them? So traditional assets being put on chain.
Yeah, so for us, again, taking into consideration some of the risk elements and some of the misconceptions when it comes to digital assets. Obviously, when you mention digital assets, everybody starts thinking about crypto, including the regulators. I mean, I'm not just saying, not just the financial regulation, I'm talking about even the real estate registry, the Ministry of Justice, all the other regulators onshore. So they tend to get, a bit freaked out when you talk about digital assets. So what we've done slightly differently to contain that element and make sure we do an experiment through a controlled environment is that we have chosen to use security tokens. And what I mean by security tokens is that you can tokenize private shares within our own registry and then set up SPVs or holding companies that get tokenized, and then you can dump any type of assets you want in that holding company or SPV. The first asset class that we would like to address is real estate. There's a lot of you have been around Doha in the past 2 days. There's a lot of real estate oversupply in the market, but it also solves a significant problem where there's not enough access into this asset class. If you look at a lot of the towers in West Bay or in Lusail or in any other area in Qatar, a lot of the towers are owned by 1 or 2 or maximum 3 landlords. And these are significant ticket sizes. You're talking about a minimum of $500 million upwards. So tokenizing a tower or 2, I think, would do great good for the economy and a lot more access and liquidity to the real estate market. But that's one asset class. I'd like to see as well, Islamic financial products securitized through our corporate registration, bond issuances securitized, perhaps energy infrastructure in the near future. But what I'm saying is, through our laboratory, I would say, which is our corporate registration, we can experiment without spreading the risk all over the rest of the economy. It'll be a contained environment. If anything goes wrong, then that would be contained within the Qatar Financial Centre environment, and the risk would be managed efficiently. So, a lot of assets, I think, but we're going to start with real estate, and then we're going to start with financial products as well.
Do you see this as a way to attract foreign investment? You mentioned especially real estate, potentially.
Well, foreign direct investment is one of our objectives. I think what we'd want to see is some local investments in these asset classes to start with, but I think it will definitely give access to a bigger pool of foreign investors tapping into our economy, and then hopefully you'd have some cross-border transactions as well. On harmonization, I think that's a great idea. If we can, I think, if there was any harmonization to happen within the digital asset space, I think the best bet is that it would happen between financial centers, because we're a lot more efficient and swift in terms of amending regulations. I mean, it takes us less than 3 months to set up a financial services regulation and then get public consultation on it and then enact it. So we're pretty swift, and I think the same applies in DIFC and ADGM. So I think between those 3 financial centers, if we can come to a common arrangement where, digital assets and certain financial services products can passport into each other, I think that could definitely be achieved rather than a larger passporting mechanism for the entire GCC, which could happen, but I think we're still far away from that.
So Ola, looking at sort of the outlook now, we talked about demand, but is there any specific area that you see having more demand? Is it coming, you're more focused on consumers, but are you seeing more activity from institutions as we're seeing elsewhere in the world?
Definitely. So from our standpoint, obviously now we're looking at growing more into, I would say, the institutional base. And a lot of that, actually, what we find in the region is mostly family offices that are getting exposure into crypto. Funds as well, but I think they're taking, very kind of incremental steps toward that. Largely, I would say in this space, there's 3 trends that we're looking at very closely, and I think will be very exciting over the next 3 to 5 years. I think, not to repeat the point, but tokenization is a very important, and I think will be significant market opportunity. Today, in terms of tokenization as assets, the market is close to 22 billion, apart from stablecoins. So I'm kind of removing stablecoins from that category. And a lot of that is across the DeFi space, tokenization of money market funds, and essentially where you get better returns or better yield as you invest in the token versus into the fund directly. So I think there's a lot of that innovation happening in the tokenization space, but obviously the opportunity is much larger. And as Yousef mentioned, by 2030, actually the market is expected to grow in trillions of dollars. And that's where you see tokenization of hard assets, real estate, equities, etc. So definitely a very important vertical within crypto and high growth. I think second is stable coins and unlocking more growth through real-time cross-border payments. And there's been a lot of that activity as well, I would say, in the UAE market with opening up of the regulatory kind of friendliness or frameworks. So stablecoins, I think, is a very interesting and high growth area, unlocking also, I would say, more trade growth. And overall, from a consumer level, B2B, and from bank to bank as well, in terms of, in some sense, providing a better cross-border payment network versus SWIFT and some of the other existing cross-border payment networks. And then I think third is institutional adoption. So we're definitely seeing the ETF market growing significantly. Interestingly, actually, as a sovereign wealth fund, Mubadala has grown its exposure in BlackRock's Bitcoin ETF up to 400 million or above 400 million in terms of exposure and holdings. And I think we'll see more and more warming up in terms of institutional adoption across the region, but also internationally. And lastly, I would say it's quite interesting to see the US building their own Bitcoin reserve by way of actually allocating some of the seized assets into that. It'd be interesting to see how other countries would also respond to that. So institutional adoption overall has been growing, which is quite interesting.
So do you see also, Emmanuel, from your vantage point, more larger financial firms getting interested in operating in this space, coming to you and saying, hey, can we do something in this area?
Yes, is the short answer. In particular, in the last 2 years, we've noticed exponential growth in institutional interest in the framework and in different ways of approaching it, not just in terms of, say, custody, for example. We're looking at it from exchange operations, derivative-based products. So it's a range. But definitely the institutional-grade investors, I think, have changed the tide of the crypto market, but not just the crypto market, the digital asset market more broadly. BlackRock and its CEO came out, last year and espoused the virtues of an ETF, for example, but also other areas of growth in that area. So I think what we're seeing globally is the market maturing and developing. And that's important because having the institutional grade investors in the market with that maturity and understanding of financial services regulation brings the adults in the room to a large degree and accelerates the whole process of evolution of this industry. So we think it's clearly an asset class that's going to stay, and it's one that's growing. It's growing rapidly, and we as a regulatory agency at the FSRA, we want to make sure we can regulate it properly.